there's been this ongoing conversation about the reform of the mandate of the European Stability Mechanism. There is a treaty that it still has pending ratification from Italy, but the novelty here is that there is a new function, a monitoring function that will be on top of the one that it mainly currently has, the ESM, which is to be a firefighter or a second backstop to the financial system in the European Union. So my question to you is, how will this new monitoring function will play out or complement the role of the SSM?
So the core mandate of the ESM was and will be in the future to be the crisis resolution mechanism of the euro area in order to preserve financial stability. And maybe you or many students or people don't remember the intensity of the sovereign debt crisis where we were activated. But if you go back to this, actually what it means, preserving the financial stability of the euro area means preserving the integrity of the euro area. And I think we can rightfully claim that without the ESM, today the euro area would not be the same as it is, because some parts may have broken off. So the integrity, that's our core mandate. And as you said, member states decided on a new ESM treaty that has been ratified by all countries except Italy. Italy has signed it, but ratification is still pending. So the three key things that come with it are, first, that the ESM is meant to be the common backstop to the Single Resolution Fund. Mm-hmm. That is core in order to preserve the stability of banking union. It's the financial backbone of banking union, because we would step in if the Single Resolution Fund runs out of money. Then we can provide loans to the Single Resolution Fund. That is one important piece. The second important element of the treaty change is that ESM is meant to have a broader mandate in designing policy conditionality in future programs. So jointly with the European Commission, we would design the policy measures that member states would have to take. And we have always made clear that we cannot do that without being prepared, without having a chance to monitor countries and then identify the sources of financial instability that emerge there. Mm-hmm. So that is, we need a stronger monitoring mandate. And jointly with that is the third element that comes with that treaty change, which is to preserve and strengthen the precautionary character of our interventions. So we have precautionary credit lines. And one of the lessons that we have actually drawn from the past crisis experience is that it's better to prevent than to cure. It's easier and more efficient to extinguish a small fire rather than a big one. That is why those precautionary instruments are so important. But as it says, if you want to be able to take precautionary measures, you also need to be able to monitor where risks emerge. And that is why we also strengthen our monitoring role. And our monitoring, I think, has a specific feature that is linked to us as a crisis resolution mechanism, which differentiates us from other European institutions, including the SSM. We look at where financial stability risks emerge in the economy, in the household sector, firms, financial institutions, the public sector, how those risks may migrate from one balance sheet, if you wish, one sector to another one, and how that creates ruptures and financial stability risks. That is our task, and then to assess how we potentially may be called in. And this, I think it's this specific monitoring perspective that makes our work valuable.
Perfect. Now, do you plan to monitor any specific risk under this new mandate, and how will this decision play out with the other function, which is to be a second backstop to the Single Resolution Fund?
Monitoring is key to our crisis preparedness, and that is why actually at ESM we invest a lot of energy and effort into constantly improving our monitoring capacity. And I think we have developed a very sophisticated toolbox for that. There are also new elements that come to the monitoring framework. For example, in more recent times, we have also very much looked into the area of climate change and the risks emerging from climate change and how we can integrate those in our framework. Now, more specifically with a view to our role as a common backstop, here we have actually developed jointly with the colleagues from the Single Resolution Board and also in close consultation with colleagues at the European Central Bank and at the European Commission, a framework in order to assess the repayment capacity of the banking sector. So we are a lender, and for us to give a loan to the Single Resolution Fund, upfront we need to confirm to our shareholders that, and to the institutions, that we consider the banking sector being able to repay that loan without being overburdened. And for that we have developed a methodology that is a very flexible, if you wish, crisis scenario assessment tool in order to verify that we consider the banking sector to be able to do so. So in that framework, our direct interlocutor, our counterpart, are the colleagues from the Single Resolution Board. But if we would become active, obviously also the SSM is having a role, not necessarily interacting with us directly, but maybe indirectly. For example, when the SSM formally approaches the SRB for consultations on a failing or likely to fail institution, then the SRB can send to us a pre-notification. Okay. Or in turn, when we have to take a decision on the provision of a loan, the ECB is also in the board, and there can be a situation where the ECB confirms that there is a specific financial stability risk, which would allow us to change our procedure and have, if you wish, an emergency procedure. So there is interaction in the process, but in general, in this constellation, our main interlocutor and counterpart is the Single Resolution Board.
Fantastic. And how do you plan to carry out this monitoring function in practice? I mean, will it be via public reports or through a direct communication line with the SSM?
In our role as a backstop, as I said, our main counterpart is the Single Resolution Board, and our interaction with the SSM would be rather via the colleagues from the Single Resolution Board. So there is no direct reporting in that regard to the single supervisory mechanism. Having said that, there is close interaction in normal times with the colleagues from the SSM. I mean, we talk to them, we have contacts with a view to certain countries that we monitor, that have programs with us. And for example, they were also engaged with us in the development of the repayment capacity methodology. So there is interaction with colleagues. But when we deploy our instrument, then the connecting point is rather the Single Resolution Board. On monitoring overall and how we look at it and what we do, what we report, I think here you must also look at the ESM more generally and how you communicate as a crisis resolution mechanism. There is a certain component of our work that we want to be public and that we communicate publicly, for example, through a blog series, where we address certain topics in order to clarify where we see financial stability risks, in order to clarify how we work, what we do, what our instruments do. That is public communication. And I think it's very, very important for us to do this in order to be a transparent and accountable institution and have a connection with the public. But when it comes to a crisis, for other institutions and for us, it's also very important that things that need to remain confidential in order not to broaden the crisis. And when we will deploy our instrument and our interaction with the Single Resolution Fund will be done in full confidentiality in order to also help to preserve the financial stability in that specific situation. So there will be no public reporting on this. when we deploy the instrument.
Thank you very much, Rolf. It has been a pleasure to have you here, and we look forward to having you back at our school very soon.
It has been a great pleasure for me. Thank you very much for the opportunity.